That was the international press view. Time to say hello to Delaney and to Susan now for a roundup of the business news.
Morning.
France has finally sold some Rafale fighter jets.
That's right, Chris. For the first time since becoming operational in 2002, Rafale fighter jets are being sold overseas to Egypt. It's a late start for what's considered a high-performance and expensive fighter craft technology. The French defense minister is scheduled to travel to Cairo on Monday to formally ink the deal. Shona Bhattacharya reports.
The Rafale has landed its first customer. Egypt is buying 24 aircraft as part of a €5.2 billion defense deal. So far, the Rafale sales record is meager. 12 international bids with Rafales in the running have gone to the competition. That's partly because at 69 to 79 million euros apiece, it's 20 to 30% more expensive than its main rivals. France struck out on its own to develop the Rafale, a process that's cost more than 40 billion euros. The French army has acquired 137 Rafales to date, deploying them in recent conflicts like in Libya and Iraq. Made by Dassault Aviation with Thales technology, it's responsible for 7,000 direct and indirect jobs. With this first international order comes a risk. To help the deal, France has guaranteed half of Egypt's credit line. If for some reason Cairo is unable to find the money, it's French taxpayers who will be paying instead.
Now, speaking on French radio this morning, the CEO of Dassault has confirmed interest from Qatar and Malaysia in acquiring the Rafale. But long before this new interest in the plane, one country made an eye-popping order. 3 years ago, India ordered 126 jets, 18 of which would be manufactured in France, while the remaining 108 would be made in India. But 3 years on, and the deal has yet to be signed. For more on that now, I'm joined by our correspondent in New Delhi, Surabhi Tandon. Surabhi, thanks for joining us this morning. What's taking India so long to finalize this deal? What are the main sticking points here?
Well, as you said, originally the deal was signed in 2012. It's been 3 years, so obviously there have been a lot of negotiations that have gone back and forth. But currently there are two main points that are leading to this current impasse. One, of course, the cost of the deal. Now, when the deal was signed in 2012, it was to cost the government of India $11 billion to purchase 126 fighter planes. But with the endless delays, the current cost of this purchase has gone up to $20 billion, almost double of what the government was expecting to pay when they made this order. Secondly, the original contract said, as you mentioned, out of 126, 108 of them would be manufactured in India by a state-owned company, the Hindustan Aviation Limited. But Dassault has been reluctant to give out the licensing for this technology transfer, and really that is what has caused the current impasse.
Now, the Indian Prime Minister Narendra Modi is scheduled to visit France in April. Will both sides likely reach an agreement before then?
Well, the Defense Minister of India actually has said publicly that he would like to close the deal before Narendra Modi's visit in April. So he is leading the discussions from the Indian side, and he is pushing for this. In December, he had a meeting with the French Defense Minister. In January, he sent his top officials to Paris to talk to Dassault. But negotiations are still taking place. However, the fact that Narendra Modi's government has been quite keen to increase India's defense capabilities, the fact that they have already cleared $20 billion worth of contracts to purchase more arms and ammunition internationally, is definitely a good sign for Dassault. But at the same time, the government of India has also been pushing for a Make in India campaign, which means that they will not fall back on this idea that they want HAL to be part of the domestic manufacturing of this plane. So it remains to be seen really which side will agree to the original clauses in the contract.
Surabhi, thanks for joining us. Let's get a quick check on the markets now. Stocks have just opened here in Europe, green across the board this morning. GDP data release shows the German economy grew by 0.7% in the fourth quarter, and that's, as you can see, pushing up shares in Europe. Whereas, let's take a look at Asia now, where it was a mixed picture this Friday. All the indices in the green except for the Nikkei. A stronger yen weighing down on Japanese shares at the close. The Hang Seng and Shanghai Composite are trading up with gains of around 1%.
Thanks very much, Delaney, and that's it for the business.